Over the next 3 to 5 years in the mobile financial services or mobile banking and commerce space, we see a significant drive through into mobile payments. We at MCOM classify mobile payments into 4 areas: paying bills, paying other people, or often known as P2P, making payments to a merchant at a point of sale environment or in a remote merchant environment. So we've done a lot of work internationally in those areas, and we see the US market particularly driving into those 4 areas of mobile payments and the financial institutions introducing products in that regard to move that way. There will clearly be continued development across the handset space, from the iPhone through to the Android, Windows 7 being launched, and continuation of the RIM operating systems. And we also see important developments in the area of rewards and merchant-funded rewards, and such as the card-based funding from the banks is impacted by government regulation. So in terms of gaining market share for banks and other financial institutions, we believe strongly at MCOM in the need to offer a suite of services across a variety of different handsets and devices and access modes, the downloaded application, the browser and the SMS, so that the financial institution's customers is able to use the device that they have, the habits that they've developed, and consume the services that they most want to on a mobile device. Whether that happens to be simple information services, various different payment services, remote deposit, capture services and other capture services, and the like. And as long as the bank has the ability to engage the customer in the mobile channel, they will then be able to essentially develop a suite of services and continue an intimate relationship with those customers across that channel and develop not only greater relationships and profitability with those customers, but also strengthen a market share position. So things that MCOM will be bringing to the US market from an innovative perspective are often things that we've built on in our international heritage overseas. So we've done a lot of work in payments. We've been undertaking mobile payments transactions with our products since 2002, and we cover off the 4 key areas of payments, mobile payments that I talked about earlier, the ability to be able to pay a bill, and we're partnered with Fiserv in this market, who is the #1 online bill payment organisation, so we're strongly represented there. The ability to be able to pay another person from a person-to-person perspective. We've done a lot of work in different countries. In Australia with ANZ Go Money is a fantastic service in some of the developing markets that we work in, and we'll be introducing services for person-to-person into this market. The remote merchant and point-of-sale merchant payments are also developments that we've undertaken overseas that we're looking to bring into this market. We're working with other organisations to bring services to market from a content perspective, essentially to augment mobile banking and payment services with additional information or services that will be useful to consumers and small businesses that we'll start to see towards the end of next year. So I think the top priority for banks who are pursuing opportunities within mobile financial services is, first of all, to make sure that you strongly engage your customers in the mobile channel. Obviously, there are other third-party organisations and traditional competitors for banks who are doing that, who are investing in the mobile space, and they're seeing a great level of adoption by consumers when they're putting compelling services in front of them. So I think the #1 priority has got to be to get out there and provide the basic set of services that are required in this market, from information services, transfers, bill payments, ATM and branch locator, and get those hygiene factors in place first of all, so that you are actually engaging your customers that want to use mobile before your traditional and contemporary competitors come in. After that, it starts to look at some of the innovations, or started the developments into payments and other innovations we would recommend. So I think the reason that we haven't seen all the financial institutions in the US adopt mobile financial services, there's a couple of factors. One is simply they've been distracted with other priorities. Two, that they have infrastructure that doesn't necessarily allow them to do that easily, and some of the work that we're doing with full software as a service suite through Fiserv enables banks to be able to do that very, very easily when they have other Fiserv products installed. So I think as those sorts of services, and other providers are doing it as well, as those services that are made available to some of the smaller financial institutions, they'll find it much easier from an infrastructure point of view to actually offer up mobile financial services on a cost-effective basis, but with a good set of services. I think otherwise we look at some of the traditional concerns that consumers have had around security and usability. I think some of those are now largely behind us. Security obviously will be something that we all continue to focus on very heavily. We've certainly got strong devices out there now in the hands of the consumers, and I think that we have seen very much most of the top 100 financial institutions make a play in mobile. I think we'll continue to see more and more investment there across the board.